Hi everyone, Joe Vitale, American Retirement Advisors, the Gradient Investments weekly market update for the week ending September 9th, 2022. Let's get into stocks. Stocks rose last week, led by the NASDAQ with a 4.15% gain, followed closely by the Russell 2000, which was up 4.07. S&P added 368, while the overseas developed markets increased 0.89, and the emerging markets declined 0.13. In the U.S., the best performing sectors were consumer discretionary materials, where energy and staples were the poorest. By style, growth outperformed value this last week. Now, in fixed income, bond yields rose and prices fell last week, with the benchmark 10-year Treasury ending at 3.33%, up 13 basis points. The yield curve continues to be inverted, extending that somewhat as two-year yield rose by 16 basis points, while the 30-year only rose by 12 basis points. Now, in commodities, oil prices declined on growing recessionary concerns. West Texas crude finished the week at $86.79 per barrel, down nearly $35 per barrel in the last 3 months. Now, gold prices continued to strengthen since their low of $1,712 per troy ounce on September 6th, at which the yellow metal had touched and rebounded from the March 2021, and again late July it closed the week at $1,728 per ounce in response to the drop in the U.S. dollar, which year to date has a headwind to gold. Now, in economic data, job layoffs for August were down 20%, 20.6 from July. For the first 8 months of the year, the total number of layoff intentions is 27.4% below last year's count. Now, this was the lowest total for the same period, since job cuts have been tailed since 1993, as demand for labor remains elevated. The gains in home prices slowed sharply in June to 0.4% below consensus expectations for a 1.1% month-over-month gain. This is by far the slowest advance in the 20-city index since the pandemic and more than 2 years ago. Now, the year-over-year rise of 18.6% is down from 20.5% in May's report. Company news: Verona Systems, a Core Select and G33 holding, and Splunk Inc., a contrarian choice holding, rose 15.89 and 8.15 respectively in response to a strong report from one of their competitors in security software sector. Now, as you see, we talked about what the market did last week compared to what's coming this week. We already saw all those gains taken away this week. I will tell you more about that in next week's commentary. I will not be here for next week's commentary, so I just wanted to give you a heads up so you'll see it, but I will not be letting you know what's going on. But this week, because of the recessionary numbers, we were seeing that we thought that inflation had peaked. Well, guess what? The new numbers showed it hadn't peaked. So as a response, we lost 1,200 points in the market. We're also down today. So, oh my goodness, it's Armageddon. Is it coming to the end of the world? No, but this is what happens when a recession happens. You're going to see that things are going to go down. You're going to see that any kind of response marks a big sell-off. And then it's going to be, oh, maybe it wasn't so bad, so the market's going to come back. It is going to be very, very volatile, which is why it's so important to be diversified, so important to have safe money, so important to have those guaranteed buckets of money that we can pull from. That's why we sit down with you. That's why we make sure you've got safe money in places, so we can pull it from that and wait for the market to come back up, and then take the dividends or earnings out as we need to, and we don't have to worry. So pray, trust, and don't worry, right? Better easier said than done, but that's why we got you diversified. Call us if we can be of any help at all. 855-756-5700, or visit our website at aradvisorsinc.com. Don't forget to share that at our Facebook and YouTube pages. Scan the QR code to get our newsletter and share it with your friends. And that's it. God bless you, and we'll see you soon.